Well, I'm excited to have Scott Paul here today. He's a longtime angel investor based in Utah and focused in Utah. Um, he's also a self-proclaimed startup comedian, hair influencer, and a generally fun and irreverent personality. So I get a lot of mileage out of your social posts personally. So and following along. So other people should too, I hope. But he's also founder and partner of Convoi Ventures with Trent Mano, who I've gotten to know. But your Utah focused pre-seed fund going in early. And that's how I got to know you guys, was through some of your marketplace investments and some of the great founders you guys have backed. So
awesome.
Yeah.
Which one was it? What do you remember? What marketplace investment?
It was Ruck.
Oh yeah,
yeah.
I just saw.
But I also know Neighbor folks.
Neighbor,
and
yeah,
a lot of this. So
yeah. Ruck was up here. Lee Chang. He was up here fly fishing near my house yesterday, so I got to hang out with him. He's one of a kind founder for sure. He's been coding. He didn't know how to code 3 months ago or 4 months ago, and now he's using Chat GPT to. Or at least the coding version of that. I think it's called Codex or something like that. But he's been coding away a mobile app all by himself with little to no training, which is just so impressive to see founder do that.
Oh, I love the hustle. All right. Well, let's get into some basic questions. Just like like we talked about, we really want to understand kind of your journey on the angel investing side of it, and then also really any wisdom you can impart with people. So, So how many angel investments have you made in the past? And tell us a little bit about that.
Yeah, I'm kind of lost count because a lot of it is like, there's so many. I've been doing for almost, let me think, 2014. So we're coming on 9 years. And at the very beginning, what got me into it was I sold a company, and I had this, like, I could either go out and do another one, or I could take some of the winnings from that company and spread out the money to all these ideas that I had, but I can't execute on. And that was like, so that's kind of how it started. Is like, instead of like feeling like I can only do one idea, what if I invest in lots of ideas so I can kind of be a part of lots of stories? And so it ended up, I think the first year I did about 5, and then 6 and 8. And so it's totaled up to be about 70 or 80 investments over the last several years, and that's ranging from as small as $5,000 up to almost $250,000. So it's the range of what I invest as an angel can vary greatly, but I would say the average check size is about 25,000 for these angel investments that I've made. And I did so many that I actually ran out of money. I cannot help myself. It's an addiction, because there's all these things you can put your money into. You can put it in real estate, you can put it in yield, you can put it into toys, you can put it into savings account, stocks, whatever, crypto. I put every last dollar I could into startup ideas, and it was to the point where I just had no more dry powder, they say, to go and invest. So that was a good part of starting the fund, is I can keep my addiction but use other people's money. So that's what I'm doing with Trent now.
Scott, what percent of your net worth would you say, when you kind of finished your angel investing and moved on to the fund, what percent of your net worth had you put into angel investments?
Oh, it's really,
well, feel free to ballpark.
Yeah,
I know it's a little.
But I would say close to a third.
Okay.
Of all my net worth. That's including like real estate, crypto, everything. I have no money, and I have almost $0 in like traditional markets, like stocks, and like I want to be in the place where I know really well how the things work, I want to know the founders personally. I just feel out of control if I'm giving my money to an IPO'd stock that I don't know. I don't know anyone on the board or what they're up to. And so that's pretty important to me that I put my money where my mouth is. And I like to be in places where I feel like I understand the market.
Very cool.
In that early stage, the angel checks, it's just a special time, because you really can just kind of you can really be a pivotal part of their journey with just one little piece of advice sometimes, or that an extra, they need an extra few $1,000s, and it's like that can make the difference of them going forward or not. And I really like having that impact on startup ideas and companies.
Is there a certain stage, style, type that you look for? Like, what's kind of like your pattern recognition for companies you like to invest in?
Yeah, great question. I think my favorite would be the like a team of two that have worked together in something else, and that one of them's technical, and then the other has like a really good biz dev kind of sales or marketing. Someone that can get the distribution out there, so strategy and distribution, and then someone can engineer and build the product, and that's like a dream come true. And someone that's had a little bit of success, tasted success in the past, and knows how to hack systems, knows how to not waste all their time on the less important parts of building a business. Because there's just so many things when you start your business that are minutia, that are just distractions. And a lot of times that is what holds up and burns a lot of the time and money of these startup founders. It's just learning how to actually operate, hire, do HR, figure out how to not just run into all the pitfalls that come with being a business owner. So I like people that can kind of just stay on the track of like, here's the job to be done. Here's the core thing that's going to make a difference, and just plows straight towards that.
And what sectors do you like as far as when it comes to your investments?
My favorite would be consumer tech. So
consumer tech,
so very risky. So like those marketplace stuff, an app, something that if they hit it, it has a good chance of being distributed widely and shareable, and can almost trend, if you will, because of there's not a lot of friction to getting the product to market.
Got it. And you mentioned that you like early stage because of the impact that you can have, and a few $1,000s and all of that. Do you sort of think of it like strictly pre-seed, seed, or is it just on the earlier side is what you're kind of most interested in, and where you think
for
you
me
can
it's
have the biggest impact?
always been, I've only invested in pre-seed, seed. Yeah. It's usually by the time it's sometimes angels get to go along with like institutions on a pre-seed or seed deal. So I had several of those, like Neighbor was that. But I like being before the institutions. I like to be the pre-seed. I like to be the first check. I like to be the person that takes that chance when no one else does. And I have been wrong, almost 8 out of 10 times. But those two have covered the if you think, let's just say I have 50 live active investments, kind of that I've out of the 80 that are still kind of around, probably only 5 or 10 of those will actually materialize. But there's already a few in the portfolio that have paid for the entire, game that I've been playing. If that makes sense.
Totally.
Let's say I invested a total of $5 million into startups. There's 2 companies who have already, covered that for me. And so, that's actually at their current valuation, which means it could die, it could go away. But
on paper,
I'm betting on those companies to, 1 or 2 of those to cover the entire game that I've been playing of best betting on these startups, and that's about average, honestly, for most of these funds and most of the angels. Is you're gonna have to play a lot. You gotta have a lot of at bats. If the worst thing you can do as an angel is do one, less than 10 deals, or less than 5. Less than 5, you're probably going to just lose all your money and then never want to do it again. If I stopped at my 5th or 8th or 10th deal, I would have had a very bad experience with angel.
Yeah, so many good questions that come out of this. But one that I always like to ask is, what is the fastest one of your deals has gone out of business?
That's interesting.
You can name names too. We won't.
Yeah. I've actually
FTX,
mostly just been on my own startups. So the times I've invested myself and started something, I've actually started and closed down an entity within a calendar year. Well, yeah, that's happened before, but no, it can happen within under a year. And I actually love that because usually the founder moves on. So in all those cases, I've invested in those people that I did business with. I invest in their next thing. I love when something gets moved on. What the worst thing is just these 7 year holds that don't update me, don't give me any sign of momentum, and they're basically in business, but like on life support for years.
Zombies.
That's the worst. Yeah, zombies. Yeah.
All right. So selfishly, I feel like this is something that I have been thinking about a lot lately is, there's companies, it's like, how do you think about those companies? Like, do you write them off in your mind? Or it's like some of them are still alive and kicking, but probably never going to have a venture, type return. Some of them literally, like the company doesn't exist, but they haven't quite dissolved it. Like when companies, basically fail, like what's the actual mechanics that you've seen happen? Like how do these companies dissolve and how do you think about it? Like as one of your angel investments?
Yeah, we've actually, so since I've only been doing this for like 8-9 years, if you think about venture investing, it's usually a 7 to 12 year hold before action starts happening in most companies, like for better or worse. So there has been some that died along the way, and hold on, cancel the call. There have been some that died, prematurely, and yeah, the way that they dissolve is pretty different. And for tax purposes, you do want to kind of write it off, but it's like they don't want to close it down because there's this chance that something will happen. There's no real need to always close something down, especially if you have a few users left, a little income. They just get it to a point where it just kind of keeps going, and that's just not exciting. And so I haven't ever like written something off prematurely, but I have tried. And what I'll normally do is like if it's just something where I'll even like sell my equity back to the company for like pennies just to have a transaction where it's like, hey, give me 5K, take my, it's like a 50K investment that I'm now getting 5K back on, but at least allows me to take a loss that year if I had wins. And one thing I think is really important is I just had a conversation last night is I actually might read it while I'm talking to you guys. It was one of these angel deals I did, and it's important to like remember there's humans behind all these things. So my reputation as an angel investor is about important as the reputation of these founders as founders. Like you do not want to, I do not want to be listed in this like shark category where, you're just brutal. One time I did get really, really impatient and really rude to one of the founders that I invested in. It was because he left and started another company and didn't really tell anyone, and just left my investment high and dry after I just wrote another 20K check. And I was just like, I wanted to make sure that everyone that was working with him knew that he was a bad entrepreneur. And like, I went out of my way to call other people and angels and say like, watch out for this guy. And I think that's important to do that. Like, I think we're supposed to like swarm and have group, some type of group, like, information so we know how to avoid bad deals. But I went about it pretty immaturely, and this was about 3 years ago, and it took me a while to like forgive the guy and make up and realize like it's just like he wasn't an entrepreneur at the end of the day. That wasn't his skill. And but he's still a good human and has a family and everything, and I shouldn't have acted some of the ways I did to him.
Yeah, I think this is something that I've struggled with. I've had a couple companies close down, one recently and then another a few years ago. And, I was an advisor and or investor. And I think the thing I struggled with was like, I feel like I had helped them a ton, at the beginning of their journey and always been there for them. Call me anytime, text me anytime. And I feel like this dissolution of the company had happened like really quickly without much heads up to me, without much notice. And I kind of go back and forth if it's selfish of me, like, hey, I'm not the one, slaving day in, working 60, 70, 80 hours a week like they are. Like, I know they feel bad about it. And when companies go bust, it's like a tough situation for everyone. Yep. Like, do you think, entrepreneurs should sort of keep people like me more in the loop? Or is it just like, man, shit hits the fan and, everyone's kind of just, I haven't like, I don't know. I'm kind of torn, to be honest, in that situation.
I think the goal should always be more communication. Yeah. I think in any relationship, anything, it's like more communication. So both entrepreneurs, the founders and the angels and the VCs could all do better with having like some additional disclosure along the way. The best companies I've seen are the ones that do monthly updates that are just, they take the time to create storytelling and put people on their journey, and they are succeeding tremendously. The ones that do that in the right way, and mostly they succeed because people want to help companies, founders that are having people come along with them and in their journey, and then have asks and and wins and share those. It's why we as angels invest. It's like we want to be a part of something. We're not. There's no way people are just doing angel investing for ROI. It can't be that alone. It's like there's much more passive, probably risk-free ways to get ROI. So we want to be there on the story with you, and so companies that do really good updates and founders that do really good updates and angels that check in with founders. I think more communication always is never a bad thing.
Yeah. It's funny. I think you guys hit on a thread that there's like a large amount of emotion in this as well, as much as you think about it as a transaction or like I'm investing. But when you put your time and energy into it, you're also saying I have an emotional investment in it. And I think that's where the communication piece always hurts, is when it's like a breakup where you didn't know it was coming, right? It just somehow is worse than if you knew it was coming. So no, that's really interesting to talk about. So
let me read something real fast.
Oh yeah, go for it. Yeah,
last night, ironically, at 11:30, I told one of the investments that's just in zombie mode, doing taxes and curious if Trolley is still operating. Not currently, he responds. Should I write it off, or will it make a comeback? I understand if you shut down. That's nature of startups. In hindsight, I should have. And now he's saying, in hindsight, I should have probably shut it down when COVID first killed it. It was so difficult to come back from that, and no money or team and existing cap, and with the existing cap table, it wasn't attractive to investors. Should I officially shut it down now? Question mark. What happens if I do something in the future? Would my investors think they deserve a piece of anything I do that's remotely similar to Trolley? And I say, I think you should write a note to the investors. They should be fine if you shut down. If you do the same thing later using any of what Trolley has now, it may be sus, but I doubt that will be an issue. How you been? How's working in California? Just kind of like, you're human. I'm checking in on you. It's like you lost, $30,000 of mine. I don't care. It's like, that's the game I played. That's what I signed up for. Yeah. It's just like, that's angel. And I've got the point now where it's just like, I have lost so much money giving it to friends and family. And it's just like, I knew from the beginning that was the most likely outcome, so that I never let that get too emotional for me as we're speaking. Because it's just like, you're in the angel game. If you have any feelings that it's going to be anything but that, watching your money burn, then you should not be playing angel. You should not even write a single check and that's why they have accredited investors only to be doing angels, because you're going to lose and you need to be okay with you losing. You can't go get lawyers because some startup founder lost your money. Like, it doesn't work like that. Yeah.
So, in all of this, I mean, you're giving some great war stories and some wounds and some scars here, which is awesome. If you could go back and kind of looking at everything you've done, what advice would you give to Scott, angel investing day one?
Yeah. I mean, it would be just the advice of everything I've learned in the 9 years I've done it, which is like, don't invest in solo founders. Like, those always want to go down. Don't invest in a space you don't understand, or is just not a huge attainable market. Like my first company I did was a massive check into a ski outerwear company. It was just like, no. Like, there's no metric with my current company, Convoi, would.
You did that one because you like to ski, or
I like to ski, but it's just not a market. It's not a venture deal. Gotcha. Not an angel deal. It's not a place where you're going to have return. If you do that, you're doing it because you just like the person and you have enough money to just kiss it goodbye. I mean, that's really what that was. But it was my first check. It was way too big. It was greater than 100K. It was my first. I had allocated only 250K to my first year of doing angel, and I burned most of it on a deal that was not even a good angel like investment by any standards. And so it's just like I would have gone back with a little rule book of like my 20 lessons. Like basically, I would take what Convoi Ventures is doing, which is my company right now, which just kind of our thesis and a model, and I would just have said, follow this for your angel investments, and you will probably have a 300% greater outcome. And it's because at the end of the day, I do want returns. I don't want to be in a cash tight. I would like to be able to have returns so I could keep investing in companies. And when you make bad bets, you can't do as much. And so that was the advice I'd give myself. But at the same time, I know that I would not arrive where I have if I didn't have those hard lessons. So I don't want to cheat time and go back and cause a different experience than I had, because the experience I had was perfect.
Yeah, very cool. Well, I think the last thing we wanted to ask you about, Scott, was your transition to the fund. So if you can talk a little bit about kind of the impetus for transitioning to a fund, and then maybe feel free to also share, kind of like what your check size is, and kind of what you're focused on now with the fund and all of that.
Yeah. Well, we still have, my wife and I are still running Hyperactive Capital that was our kind of family office doing all the angel. So we still have that, and I'm going to be coming into additional funds here in the future because I'm always active doing things, and so I plan to make a lot of angel investments. I just don't want to be a conflict of interest with Convoi, so I'm kind of taking some time off to get Convoi started. The transition was Trent Mano is a community builder. He knows how to create great community. He knows all the founders here in Utah, basically. And between us, we got Utah covered. And so we thought, what about doing this highly geo-proximity or geo-specific fund and let other people who don't have the time to do the hard knocks of angel, which is meeting with a ton of founders, learning all these lessons that I've learned for 9 years. Yeah. Why not just make a fund that allows them to participate in the stories, meet the founders, but not have to worry about any of the diligencing, any of the hard stuff, and just kind of like write a small check and ride along with us. But skip the stuff, mostly because these people are employed. They're their LPs. They're just not. They don't have the time. And so that's really what Convoi Ventures became. Was we took all these so a lot of these exited founders that maybe work on their next thing, but want to get back to the community, and they are most of our LPs. And then the founders, our thesis is to cut checks of about $100,000 to $200,000 to 2 or 3 deals every month. And these are only in Utah, and they're usually in the seed stage or pre-seed stage. And we want to just be a prolific contributor to the ecosystem here by getting a lot of deals through.
Very cool.
And it's a special time, that first check, when you need that money to kind of quit your day job. That's a hard check to get, and we're really easy. We're one of the easiest, like on the terms and everything. We kind of let people set the terms and do really simple agreements, because we know that it's just like you just got to get 1 or 2 people, usually 2 people focused on an idea, and not trying to do this side hustle all the time. And so we really want to get you out of that day job and into that full-time founder position, which you get to really crack down on the problem that you want to solve.
Yeah, that's cool. And I've actually don't think I've been to Utah in a while, but I'm curious about the focus on Utah. Is it because of the community that you built there, or because you live there and you kind of want to support the entrepreneurs and the network there, or is it a little combo of both?
Utah's probably leading in so many indicators, and it just doesn't. So it's like it's a good bet as a geography. And the proximity for the LPs and the founders to be able to do community related things, to learn from each other. So our fund doesn't have, we don't have a ton of people that can give you expert advice inside our fund. Like it's just me, Trent, I, and a few interns. We don't have a huge payroll or team, but what we have, which is unstoppable, is coming up on 100 LPs who are mostly local experts in tons of industries. We will meet with our founders in person, grab that lunch, be at an activity, and that's happening almost bi-weekly.
Yeah, that's cool.
Very very hard to do in any other fund that's not geospecific. And it's like, yeah, sure, you can get on Zoom calls and stuff, but that's just not the same. We're out doing activities all the time, dinners, meeting, and the collisions that can happen and the value of our fund outside of just the money, the check we write, I think is second to almost none when it comes to the external benefits of having an LP base that wants to help right there, that has expertise in the area that you're in. So I think that's why Utah, and I don't think we'll change that for a bit, because there's just a proliferation of companies here as well. So if we didn't have options to invest in, we'd have to go outside, but we have actually too many still.
Yeah, I worked at Ancestry.com like a long time ago now, but I worked out of the San Francisco office and got to travel to Provo like pretty much monthly. And so the diaspora of people that came out of that has been really just fun to watch. And that's kind of been my front row seat for a lot of the Utah companies, and also another connection I had to Utah. And I think it's one of those like hidden gems where there's like been a lot of decent sized exits and companies that are kind of like the bulwarks of a lot of things. Like I look at like Adobe Omniture now, things like that, Vivint, Ancestry, a lot of companies there that you just didn't, don't really think about. And it's been really fun and exciting to see, specifically from my vantage place for the marketplace side, just all of them popping up. It's just like an entrepreneurial spirit. Silicon Slopes, right? It's Silicon Hills there in Austin here or whatever. But these like, I wouldn't call them like second tier markets, but these like nascent markets like Austin, Salt Lake / Utah, like are just really interesting to watch now, having been in Silicon Valley for 10 plus years. And I think they're having their day, and they're really the only markets growing in terms of like employment and things like that. So fun time to be angel investing there.
Yeah, it's a good time, and it's I think we're changing, and we're just finished our first year of being a fund, and what we often say, like, okay, this is what we went out with, and we've learned a lot, and things will change. And I see a day and age where we make a few changes to like the size of the fund, the stages we invest in, maybe going out a state a little bit. So all that can change, but for right now, we definitely picked what we think was the perfect focus and thesis for the fund, and it's working. It's not broken.
Well, that's good to hear.
Very cool. Very cool. Well, I think if we've got any Utah entrepreneurs out there, you'll be hearing from them for sure. So I'm sure you've got to hit the slopes, but we've got a couple trending Twitter threads that we're going to hit. One of them is actually about investor updates. So if you want to stick around for that, Scott, you can. Otherwise, we'll let you go. We'll leave it up to you. Yeah. You want to stick around?
Well, yeah, I'll stick around. Let's do it.
All right.
Well, let's start with that one. So Alex Lieberman, one of the co-founders, Morning Brew, a couple of weeks back, asked, what should a founder do to write an exceptional investor update? Before I lead into Scott, I just noticed one of the top posts was from someone I went to high school with, Emmett Shear, who's one of the founders of Twitch. He just said, be growing fast with good unit economics, and then just send whatever update you want. As tongue-in-cheek that is, it is like one of those like classic things that success covers a lot of sins in terms of like maybe not being as frequent or things like that. But I do personally, I really do enjoy getting the monthly updates. I do sometimes feel that that's almost too much.
Monthly is too much, honestly. I think quarterly is probably, if you're growing fast and doing well. I think monthly, like the first year of taking money, I think monthly is almost a good accountability strategy of just doing that. And then probably after like a year, you can kind of move to quarterly. And once you kind of get a cadence that works for you, some people are just better at doing it than others too. Like they really look forward to doing monthly. But where I would not be is zero ever. And it's just like, if you're growing a ton and you don't even have time to do monthly updates, which is awesome. Just show us the metrics, like our eyeballs are blown out. We just hired 17 new people. Yeah, it's like, okay, don't care. That's a good enough update. It's like, I would rather see that than any other massive email with a ton of charts and anything. Just tell me your guys are blazing quickly ahead. That's great.
I think I definitely am with you. I like to see early on, I like that first year or two monthly updates. Seems like a good cadence. And then, yeah, I mean, it's a lot of work to do to these updates for the founders too, right? So I would almost prefer them building and, running the company. So eventually switch to quarterly. I do think I kind of like Emmett's comment though, that like, at the end of the day, like, what do we all care about? It's like the end result, right? So it's sort of like balancing those updates with like, hey, if this is taking a lot of time, don't do it and focus on the company. But have you noticed any trends, Scott? Like, companies that have, maybe fallen, they send out monthly and quarterly, and then all of a sudden you stop getting them for a year or two and they're out of business. Has that like happened over and over to you? Or have you noticed any trends with the updates that, are kind of like red flags now?
It's funny you ask that. Because I don't pay attention enough to like, put some updates and some like pivot table and try to see some analysis of that. But we're doing that, and we're doing that with Convoi, and Trent is really good at. So I think within a year, I'll be able to tell you some interesting trends on communication from founders.
Yeah,
and what I think needs to happen is honestly, someone there. It's almost like there's a missing product there.
yeah,
Where the updates. Every update's a little bit different, and every update's got it's time consuming. It's kind of bespoke. It would be really neat to get just a founder's app that's like almost voice to text, or just like ask questions and you just kind of yes no, and it produces some type of just some temperature, right? Just something that we really need to look at my whole portfolio and have some temperature gauge on each one of them, some momentum gauge. And nothing like that exists without a lot of digging, or without, taking the updates and then putting them into your own biometrics that you want for
spreadsheet, Asana, a combo of products.
Yeah. So there's a missing product there for sure, but I don't have time.
I think you're giving like every investor headache, nightmare right now, because we're all like, oh shit, we do this. I take these updates. I have like a rule in Gmail that I try to put them into an investor update folder. I have a note, like anytime I make a new investment, I put a reminder to like check in 2 months to make sure they've added me to the update list. Cause sometimes, especially I'm a smaller check often. And so a lot of times it's like they forget to add me to the investor update. So it's like, yeah, this could be a good idea for someone out there listening.
Yeah, the thing that I always like talk to founders about, because I work with a lot of them, is like you got to have a North Star, and I find that like most, like, and just even from a metrics point of view, they don't have that at the top of the other investor updates. Like, are you doing the thing that you thought you would do? Are you are you saving people time? Are you getting them more vacation, or whatever it may be, right? Are you saving them money? And like, that to me is like the metric I want to watch like all the time, is like, is that going up? Is that improving? Is it growing faster? And it just always feels like that's never like there. And it kind of comes back to this thing that like whenever you ask founders, like, what's your revenue? And if you don't start with a number, like, that's bad, right? Like if you start with like anything other than a number, like I'm going to be inherently skeptical. And I feel like it's the same thing with like your investor updates. Like if you don't just start with the numbers, like I'm like, okay, where are these? If they're all the way at the bottom after a lot of fluffery, I'm gonna be like, okay, I need to like think about this harder. I need to watch this more. Like to me, it's just like, even if they're bad, just being straight up front with what it is and just hitting you in the face, like, these are what they are. This is the burn. This is the revenue. Whatever it is just so important. Like, and just like, even without even the other context, what you do need to provide. It's just important to level set up front. I don't know. That's my 2 cents on that.
I would love to know, like, you made me think, like, in like marketplaces, like when I don't hear from Neighbor anymore. I wish I did, but they're big, they're Series B, they're doing their own thing. I can text them anytime and say, guys, how's biz? Right. And just, they'll probably throw me what they sent their Series B investors, because I know they're sending stuff to somebody out there. They've got Andreessen and other big investors. But what I'd want to know on like any moment is just like, and maybe this is privy, they can't share this, but I kind of want to know how many people are using Neighbor. Like, how many neighborly transactions have they had? How many things are sitting in these, like I don't even care about the revenue number. It's just like, are more of the human beings sharing their stuff inside of another person's house than they were the month before? Like, are we growing are we growing the thing you guys set out to do? Are we becoming more of a sharing economy via neighbor? And so marketplaces like that, that's what I kind of want to know is like, you guys set out to create a marketplace. What's the health of that marketplace? Just, one number. I don't care about anything else. Like, is it, and
I mean, I'm sure a lot of times, you walk into a startup, they've got the big TVs and the boards, tracking the KPIs, like, for people to walk in. So I'm sure they've got something they could share.
Oh, I know they do. I just think, they might be a little more afraid of like sharing outside of their walls. There's a company in London I invested in that does esports betting. So it's basically like DraftKings or that, for esports. And I love getting their updates when they come in because they show me all the previous, months and they show me how much like the bettors took out of the system. Cause that's the thing they're up against is like, they're the house and they can lose. And that one like really lets me see like, wow, esports betting is growing. And, but they're also learning as a company how to not, to lose all their funds through, there's truly people that can out gamble the house sometimes. And so that one's really fun for me to see because it's very number centric and it's very much like betting on it's like going to a casino and that's the only one I've done anything like that. And it's really fun to watch their metrics. But yeah, I think of telling your story in an update and keeping the the previous months there or quarters and just letting people see your story as if it's chapters, right? Like you should be writing chapters of a book that's that's just got you like almost like Silicon Valley on HBO. It's just like make me get to the next episode and do it with humor, do it with like humanity. Like it should not be. You could go on the offensive with updates and kick some ass. And I'll tell you, there's one company that does that. And his name's Trevor McKendrick, and he's a writer by nature, and his company is called SACE. It's a bank, a mobile bank for the Spanish speaking population in the United States, and they are on a tear. This is one of those that will make up my whole fund, right? That's just like, and you know what he does better than anyone? Communication. 100% an excellent communicator and a storyteller and a leader, and that's his superpower. And I think like people are trying to fight to get in his deal versus like him having to beg.
Yeah,
right?
It's like a marketing tool in some sense. Like if you can lever it that way.
I mean, I'm on here in this thread right now. I'll leave a link to this in the show note because there's a good template from this guy, Daniel Gross. I don't know who he is. I don't know if you guys know him, but he has 63,000 followers and he's only following one person. So I feel like that's like legit. Okay, right there. And then he's got this huge template in Notion that has some really good advice. And that's one of the things he says. It's kind of like a marketing. Let's see who he's following, actually. Who do you want to take a guess who it might be?
Following Scotty Coin. No,
yeah, right. I can't even begin to guess.
He's following GWERN, which is a locked account, Internet Besserwiser Watashi Kitinaramasu, something I think that's in Japanese or some other language. So this guy's an interesting guy, but his template for investor updates is really valuable, and all these people are recommending it in there. And there was one other comment that I wanted to mention before we closed out this topic. It was from Turner Novak, another good Twitter meme VC king. And he says, giving individual shout outs to people is huge. Thank you, Scott, for the intro to this person. You kind of motivate people to get their name listed on every email. And I kind of thought about it. I was like, oh shit, that works really well. Cause like whenever I don't see my name listed in those updates, I'm like, oh, I got to do something for them next month. So I get that little shout out. So I kind of like that quick advice from Turner.
That is that. And I would say that Trevor at SACE does that with perfection. Yeah. And like, yes. And then not being in the shout out on LinkedIn or somewhere or in the thread, as a non-helpful investor, it's like, wait a second, like it actually causes a stir. He's caused such a stir with his updates because it's like, Trevor, wait a second, why didn't I get that? Like people are fighting to be like recognized. I'm like, that you're doing something right if you're having people fight over your investor update mentions.
Yeah. Definitely. Yeah. Cool. Well, I think that's all for today, Scott. Appreciate it. Anything else, Colin?
No, I think that's good. Scott, I'm really, thanks for coming on. I would love hearing the stories of people and how they got here, because I think that's the piece that we all relate to. The human part is, trying it out and learning along the way. So appreciate that. We look forward to hearing about more of your investments.
All right. Well, good luck. Thanks for having me on, and look forward to being able to share it once you guys publish.
Cool.
All right.